Joining me now is Scott Boss, Managing Director and Senior Market Strategist for Harbor Best Partners. Welcome to NYSE Live.
Thanks, Ashley. Thanks for having me. Santa looks like he's having a good time there.
Santa is having a good time. He definitely made a debut when he walked onto the trading floor, ringing his sleigh bells. So what trends are you monitoring most closely as trading gets underway today, Scott?
Yeah, so we invest in private markets, and I think if there were themes or deals that defined the last year or so, it's the large transaction and also the AI trade, which you've been talking about. And sometimes it's the intersection of both of those things. So headline deals that occurred over the last few months, Electronic Arts was taken private at a $55 billion valuation, which is the largest buyout ever done. So that's a landmark deal. And then OpenAI has raised 2 rounds in the last 12 months at $300 billion, $500 billion. At $500 billion, it's a top 20 company in the world, and it's privately held. So those are the things that are kind of defining the market right now.
And of course, you mentioned AI, which has been a hot topic, and November has been a choppy month, of course, with AI in focus. How are you further evaluating that sector?
So it's interesting because AI, I think, has become its own asset class, whether you're investing in hyper growth type ideas, growth equity, or even private credit and infrastructure. It dominates in portfolios. So we, like other investors, continue to lean into that opportunity. But as we look forward into 26, we're also looking for ways to diversify away from it, given how broad it's become. So in our portfolios, we like small mid-market buyouts and basic industry companies that need to be professionalized. There's also, in private equity, there's a part of the asset class that's called secondaries, where you can buy into private portfolios, many times at discounts. And so we're trying to find value opportunities in this high growth AI world right now.
All right, and according to the latest data, almost 83% of traders anticipate a rate cut when the Fed meets in December. What do you feel the Fed should do and why?
Well, I can't say what the Fed should do, but I think, if there is a rate cut going forward, it's very positive for our industry because the credit markets are critical for capital flows within private markets. And to the extent that we see interest rates coming down and borrowing, the cost to borrow is less, it's just going to facilitate a velocity of capital that flows through our industry, which I think is a very positive health marker for us. Now, that's good for our industry. We have to look at the implications of rate cuts on the macro, especially as it relates to inflation.
All right, and as you mentioned before, I understand that you're keeping a close eye on public to private transactions. What should viewers take away from what's happened this year? If you could dive a little bit deeper into that.
Yeah. So the reason that we see public to private transactions is, as public companies, many companies need to manage to the quarter, and oftentimes they have to go through certain transformations that are not going to take place over a quarter or two, but might need to take place over a year or two. And so two big themes on why these public to privates have happened is there was a point in time where public markets valued a grow at all cost business model. That's not so much the case anymore. Public markets want line of sight the profitability. So some companies have stepped out of the public markets to undergo that transformation. More recently, it's the AI enablement. And I think one of your prior guests just spoke about this. When companies report quarterly, the street wants to understand what their AI playbook looks like or what their AI plan is. And if they don't have that figured out right now, sometimes it's better to step out of the public markets and figure it out and then go back into the public markets once it's sorted through. And private equity, frankly, is value-added capital and can help these companies navigate that transformation.
All right. Thank you, Scott Boss, Managing Director and Senior Market Strategist for Harbor Best Partners.
Thanks, Ashley. Appreciate it. Happy Thanksgiving.